They can go live. They can see live.
આપણે વેઇટિંગ રૂમમાં બધા છે હવે અંદર.
We have added everyone and we have started the live stream, so we can now start the webinar.
You can start?
Yeah.
Admit કરી દીધું. Everyone is admitted?
Yes.
Yes.
Can you start?
Yes, boy.
Yes, a very warm welcome to all LMP and MCTC members to join this morning for a much needed session post audit that is about Vivaad se Vishwas scheme by none other than our income tax guru and stalwart CA Ketan Vachani sir. Past 10 years have been so supportive to CA practice because every time there is a one or another scheme, whenever a Vivaad se Vishwas scheme is announced, I become more confident that litigation practices in India will outpace any other practice area for a CA. So again, it is a whole circle. First, the income tax does not listen to us when 148A is issued. Again, in the face list, they do not consider accessory submission. And then we go on litigation, and one after 2 or 3 years, they come out with a scheme. Ki bhai kuch to de do humko. So in this circle, only the honest taxpayers and the middleman are the one who suffers. Any which ways, it is like a money generating scheme for CAs. So before starting the session, I would like to thank respected Satish Bhai Vitlani sir, LMP leader, who has always been supportive for hosting such sessions and joint sessions with MCTC. Again, a very big thank you to one and only Dr. Bharat D. Vasani sir, who is a backbone of our LMP CA Association and MCTC as well. And lastly, thank you to our dynamic president, Advocate Jaideep Sonpal sir, who is always keen to host such much awaited sessions for us. So first, I would like to invite Satish Bhai Vitlani sir to tell a few words about this session. Satish Bhai.
Thank you very much for inviting. Bharat bhai, you have been a great leader, in fact, and you have been leading from the front and coming up with all the solutions. You can think of all the topics. કારણ કે તમને આપણું મોટું ગ્રુપ છે, more than 1,200, 2,500 chartered accountants are there, on this particular group, and you come across so many questions, on that particular group. તો તમને પોતાને ડિરેક્શન બહુ ક્લિયર છે એની અંદર કે કયા ટોપિક્સ પર જો આપણે ચર્ચા કરીએ તો પ્રોફેશનલોને સાથે સાથે few who are looking for some solution could be benefited. So this is a very proactive approach, and this is what I like about Bharat bhai. Number one, and Bharat bhai, second thing is that more and more people, more and more chartered accountants, who are very new, to the profession, who are very new in practice, are getting benefit out of this. Now, this will, this particular, the experience, which you can't get from the books, they get it, from such sessions, interacting, with you seniors. So I'm really very grateful, that this particular initiative of Lona Mahaparishad is helping many. And Bharat bhai, we'll keep doing good. All my best wishes. Very, very thankful, to Ketan bhai and all, who are involved in today's sessions, for taking out time and, making presentation, Ketan bhai. I believe that, you must have consumed quite a bit of time. And, doing, for the institute, for the fellow chartered accountants and, for the public at large, this is a very good initiative. Keep doing good. We are all together and we appreciate. And खाली एक वस्तु खास कही दो, Ketan bhai, that we have Mahaparishad meeting, coming up on 30th November and 1st December. So please join as many as you can join. It is going to be a very good interactive sessions. You will know many things about Mahaparishad, which we are doing, from that particular platform. We are running roughly about 27 committees, so of which, few committees are really very important. All are important, but, few are very proactive and doing good. Thank you so much, for inviting me on this particular platform, and I welcome you all. Thank you. All the best.
Thank you so much, sir. Thank you so much, sir, for your kind words. Now I would like to invite Bharat Vasani sir to please say a few words. Sir, you are on mute, sir.
Yeah.
Yes.
Our visionary and dynamic president of LMP, Lohana Mahaparishad, Satish Bhai. Kharagar, you are doing very good activity, very good work for the our Lohana Mahaparishad. And LMP, sorry, MCD President Advocate Jaideep Sonpa, we are also doing superb for the our CA and tax professional community. Our LMP is also doing work for the LMP and tax professionals and CA chartered accountants around the world. We have more than 1,500 members, and we are doing the same activity what MCTC is doing for the chartered accountants and tax professionals. So intention is that we should our benefit of all the seniors experience should be benefited to the all the juniors are coming in practice. And nowadays less than not more than 15% CAs passing after passing CAs not coming in practice. So your intention is that to give feedback and give knowledge to the person who are coming youngster coming in the practice. So today, as far as the today's lecture is concerned, we have very good stalwarts from our own LMP, Shri C.A. Ketan Vajani. He is stalwarts and he is the encyclopedia of the income tax, I would say, and he is the master in litigation of income tax. So we are fortunate that Ketan Bhai is member of LMP also and is member of MCTC also. So nothing wasting more time. I'll once upon thank MCTC and LMP for coming together for bringing such type of program. And also thanks to Ketan Bhai Vajani to take the lead for the today's session of Vivaad Se Vishwas. Thank you very much.
Thank you so much, sir. Thank you. You rightly said, sir, Ketan Vajani, sir, is encyclopedia, Wikipedia, and ChatGPT of income tax. So lastly, I would like to invite Jaideep Bhai to please say a few words.
Thank you, Mohit. I think everything is said, and just I would like to say when the topic itself says Vivaad Se Vishwas. So when we have Vivaad with income tax department, then who is, I mean, there is no doubt that Ketan, stalwart like Ketan Bhai can only give some Vishwas to our assessees that income tax will do good to them. So I would like to invite Ketan Bhai for his speech. Before that, I would like to present him a memento, which is already delivered to him. So we can just, yeah, so. Yeah.
Yes.
So it
Thank
is a
you.
joint
Thank you.
event. So we have
Thank
done,
you,
I
Jaideep.
mean.
Thank you so much. Thank you so
Yeah.
much. Thanks to both the organization for this wonderful memento. Thank you so much.
Yeah. And one more announcement I would like to make to our Malad Chamber members. So we are going to have a Saraswati Sanman event for the children of members who have just cleared their professional exams or their any of the exams with flying colors. So we always keep this event, Dr. Bharat Vasani Saraswati Samman. So where we encourage them and we like motivate them. So dear members are requested to please register fast so we can do good arrangements. And that's it. So you can just carry on, Ketan Bhai, from here. Thank you.
Thank you. Thank you so much, Jaideep. Thank you so much, both the organization, Malad Chamber of Tax Consultant, of course, and LMP, CA and Tax Professional Association. As Bharat Bhai said, I have been member of both the organization, and it's certainly a pleasure. So, always it is a pleasure to speak on any professional platform. Now that we are coming.
Ketan Bhai, sorry to break you. I just wanted to have a formal introduction. So due to lack of time, I just forgot. I would like to invite
Take your time. Take your time. We have.
Yeah. So formal introduction we would like to give. Sorry,
You're not
sorry to
required,
break you.
You may do what.
Yeah. So we can invite Zankna madam to give you a formal introduction.
Good morning, everyone. Yeah, as well introduced by Bharat sir and Jaideep sir, Ketan sir is a stalwart, but still we will give a small formal introduction of him. He is an BCom and FCA. He is chartered accountant in practice for more than 29 years. His main area of practice, like core area of practices are consultancy, tax advisory, litigation in direct taxes, regularly appearing before ITAT, DRP, CIT appeal, and CIT in direct tax matters. He has passed out his BCom in 1992 from Sathe College, first in first in college. Passed CA final in November 1994 with 50th rank. He is presently a chairman of Law and Representation Committee of the Chamber of Tax Consultant. He is also the member of the Taxation Audit Quality Review Group formed by ICAI. His earlier positions are he was president of the Chamber of Tax Consultant for 21-22. He was the office bearer of the Chamber of Tax Consultant for the period 2017-18 to 2020-21. He was the chairman of Direct Tax Committee of the Chamber of Tax Consultant for the period 2014-15 to 16-17. He is also contributing by the way of regularly writing articles in direct tax in Chambers Journal. He also contributes to the legal updates in newsletter of WIRC since 3 years. He has contributed few articles in newspaper Vyapar and itatonline.org. He is a contributor to the WIRC publication on the budget for 2022 and 2023. He has also contributed to the WIRC referencer manual for the year 2021 to 2022-23. He was a member of editorial team of budget publication of Malad Chamber of Tax Consultant for past 7 years and compilers team for past 24 years. That's great, sir. He is also a faculty for paper writer at RRC of the Chamber of Tax Consultant in March 2023. He is faculty at various seminars organized by WIRC, Chamber of Tax Consultant, BCA Society, and other professional organizations, and also trade association on various topics of direct taxes. He is a group leader at various study circles of WIRC. He is also a group leader and mentor at RRC of Chamber of Tax Consultant and Bombay Chartered Accountants Society. Thank you, sir. We once again welcome you, sir.
Wow.
So,
Thank you so
over
much,
to you,
Jankna.
sir.
Yeah, thank you so much, Jankna madam, for your kind words. It is, as I was saying, it is certainly a pleasure when you are speaking on any professional organization, especially the Malad Chamber of Tax Consultants, where I have my roots for past many years. And of course, the LMP, CA and Tax Profession, that also is an organization which is doing fabulous work. Of course, it's a comparatively newly organization as compared to Malad Chamber. But let me mention that the work, the activity which the LMP has been doing is also fabulous. So it's indeed a pleasure when these two organizations are coming together. And coincidentally, where I am a member of both the organization, as Bharat Bhai said, it's certainly a pleasure. It's like homecoming for me, and it's something where one will cherish to always speak on this platform. I am really thankful to both the organizations for this wonderful opportunity. Uh, the Vivaad se Vishwas scheme 2024. Uh, Mohit was saying I am encyclopedia or chat GPT, etc. But Mohit, let me tell you that chat GPT, etc. at times gives wrong answers. So please bear with me if at all I also give some wrong answers. And it is basically the art of putting question to chat GPT, as I understand. So if the questions are put up in a correct manner, then only probably the chat GPT will be able to answer those. But anyway, I would like to be more on a human touch rather than chat GPT or encyclopedia, because for that I think we already have chat GPT and I don't want to compete with chat GPT, right? So with that, friends, let me come to the subject for today's discussion, and I'll just try to share my screen. Permit me one more minute. Can someone please confirm this is visible? Mohit or Jankna madam, someone can please confirm this?
Not yet, sir.
It is not yet visible?
No.
Just 1 minute.
Yeah.
Yeah. Now.
Now it is seen?
No.
Your desktop. Yeah.
Now it is. Yeah.
Now it is seen, right?
Yeah.
Thank you, Jaideep. Thank you.
Yeah.
So, friends, one second. Yeah. There is something. Just give me here. Let me try to. Okay. So as I was saying, as Mohit was, I think Jaideep was also mentioning in the initial remarks that Vivaad se Vishwas, what is the meaning of Vivaad se Vishwas? And therefore, let us try to understand what is the purpose of this scheme actually, basically. So we are a country probably where Vivad is never ending actually, and we have been having this tradition of having disputes all across, right from the Mahabharata days. We can say probably when right from the day when human culture was there, and there are Vivads everywhere. And as far as tax laws are concerned in our country, we have seen so many areas where there is a Vivad, and therefore one of the party always wants to settle because ultimately nobody wants to dispute the uh, mm, uh, matter further. It is always that peace is always desirable to everybody, and therefore such type of schemes are coming every now and then. The government keeps on announcing, and therefore we are having this history where right from in my memory, the first scheme which I came across in recent past, of course, was this Kar Vivad Samadhan scheme 1998. So in 1998 they came out with the scheme. Then again in 2016 there was one dispute resolution scheme. So every time the scheme name keeps on changing. So we have thereafter direct tax dispute resolution scheme 2016. In between this, thereafter there was in 2019 when we were into the GST era. The government thought appropriate that it will be better to have the history of the past should be erased in a very smooth manner, and therefore the legacy issue should be done away with, and therefore they came out with the Sabka Vishwas legacy dispute resolution scheme. Of course, it was in the area of indirect tax, and it was dealing with pre-GST era. But this scheme was also there in the indirect tax front. Thereafter, in 2020, immediately we had this direct tax Vivad se Vishwas scheme 2020, which was in fact initially it was part of the finance bill 2020, and then it was a separate enactment. Direct tax Vivad se Vishwas Act 2020 was a separate enactment, and then within 4 years now we are having this direct tax Vivad se Vishwas scheme 2024. So please bear in mind one thing that whereas 2020 was a separate act altogether, today's scheme, the scheme which we are going to discuss today of 2024, is not a separate act, but at the same time it is part of the Finance Number 2 Act 2024. Therefore, has all the features of an act. But when we refer to the direct tax Vivad se Vishwas scheme, in future, whenever we are going to deal with this, I mean, of course, this is just the beginning of the new legislation, and it is going to remain with us for years and years because the disputes will come out of this also, of the scheme also. So many disputes. Even today, we are seeing that many disputes are there in the High Court and Tribunal about the interpretation of some of the words of the 2020 Act. So therefore, this is going to remain, and therefore, within Vivad also we will have some Vivad. There is no doubt on that, and therefore, whenever we are going to refer to the scheme 2024, we will have to refer to the Finance Number 2 Act 2024 and the sections which are enacted therein. Rather than having a separate act, we have a part of the Finance Number 2 Act 2024, and therefore we will have to take it in that way. Having said that, the title of my slide, which says that a problem that refuses to cease, really, I feel that are we going to have end of litigation? The purpose is to bring down the litigation, probably end it if possible, and end if not, if at all we cannot end, then at least bring it down to a level which is desirable. No, but the moot question is whether do we really are intending in that direction? Are we going in the correct way? And when we look at some of the provisions of this scheme also, we feel that there are few areas where something better was expected from the government, and it would have been better if they come out with some more clarification. Of course, it is anticipated, but the intent seems to be losing somewhere in between, because ultimately we are putting so many restrictions, so many ifs and buts, and therefore at times it becomes discouraging. Also, I think Jaideep was mentioning, or Mohit was mentioning about this, that yeah, Mohit mentioned about this, that do they really want to end the Vivad? Look at the assessments happening in last 3 or 4 years, and reassessments happening in last 3 or 4 years. 148, 148A have been rampant. We have seen so many 148, so many 148A. In fact, at times when there is no requirement of 148, they are doing 148. They are going on the wrong information which they are getting from which source nobody knows. They are just harassing the associate at times, and therefore they keep on troubling this 148. Also, I would like to make a mention to one particular set of provisions which has created all the difficulties in last couple of years. And I'm referring to section 68 to 69D. Members will appreciate that, uh, when we face the assessment, we have seen that many a times the normal additions also tried to be brought into the regime of that 68 to 69D. Even if whether it is fitting it or not fitting, whether it is worth it or not, nobody bothers. Whether the section applies or not, 68 to 69D. And this is something where, lot many brainstorming is required in 68 to 69D. And since Bharat Bhai is here, since Jaideep and all are here, you may consider having, a deliberate, a dedicated session to this 68 to 69D, where, lot many controversies are arising today. And the simple reason is that, the corresponding tax goes under 115 BBE, and therefore it goes up to almost 75 to 70, 78%. We have seen that the tug of war starts in that also, because something which was otherwise a normal income is attempted to be brought within the tax net under 68 to 69D for no reason, and that there the Vivaad generates. And, then the person is made to travel to appellate forum, CIT appeal tribunal, and then, unnecessary litigation, recovery pressures, penalty proceedings, and whatnot. So therefore the Vivaad doesn't cease to in my understanding, it keeps on happening every now and then. And it is generated most of the time with all the seriousness. I would like to say that, unfortunately, most of the time this Vivaad gets generated at the instance of the department, and the poor assessee has to, unnecessary go through it. And therefore at times such schemes which we are having today, 2024 scheme, is something which is in a way beneficial to the assessee. Whether it is beneficial or not, whether it is worth it or not, is for one to decide. And it will be, one will have to take a decision on each and every front, actually. On different case, you will have to see whether it is worth it or not. It may not be worth in many cases. It may be good if you are having a situation where your, the demands are old demands, especially, then you are getting some big concession in the form of interest, and possible penalty which is hanging on your head. Probably there, in that situation, yes, it may be a good scheme. At the same time, there are many cases where the case is very good on merits, and we are absolutely sure that whenever the higher authorities are going to look into it, and when I say higher authorities, I don't probably really mean too much, too hopes with CIT appeal level, but maybe tribunal, when they look into it, they are going to give the decision in a very favorable manner to the assessee. So that type of situation probably may not be very fit to go for the scheme. But yes, one will have to take a professional call. Also, it depends on the risk appetite of the assessee. At times person is really tired, actually, of the litigation, of the unnecessary stress which he has to go through, and therefore he may feel that, baba chalo khatam karo, I don't want to do janjat, let us finish. In such situation, yes, you may guide him properly, and it's a professional call. So here also, again, one should appreciate that it is a role of a chartered accountant to guide the assessee in the correct manner, whether his case is fit for Vivaad se Vishwas, or he is better off in the normal continuing with the normal appeal proceedings, subject to the risk appetite of the assessee, of course. So that is what the sum and substance of this point. But, let me appreciate that, the government has come out with this scheme within 4 years. So there are, whether the scheme within 4 years itself speaks something about it. Probably my understanding says, my feeling says that, this scheme is coming mainly to ensure that, those pendency at the CIT appeal level, and for which the government is really worried as of today. So much of pendency, I am told that more than 6 lakhs appeals are pending at the CIT appeal level. And that is for the simple reason that in last 4 years, 3 or 4 years, since the time when we had this faceless mechanism, there is very small amount of disposal as compared to the percentage of total appeals which are filed. They are not getting disposed at all, and therefore, in that situation, probably the government thought it appropriate that, yes, let me come out with something, some scheme like this. Within 4 years of the earlier scheme, we are having a new scheme which is more or less same to the earlier scheme, 2020. So if somebody has studied 2020 scheme, and I think most of the members must have studied, some of the new members will be joining the profession, who have joined the profession may not have had the benefit of learning in 2020 scheme. But yes, more or less it is the same type of scheme, subject to few variations here and there. And whenever I am saying the variations, I would feel that those variations are in fact disadvantages to the assessee. So my firm belief is that the scheme of 2020 was much better, much large-hearted as compared to the scheme which we are going to have today, the 2024 scheme, as it appears at least now. Of course, lot many things are yet to happen in this 2024 scheme, because these are early days. We are just on the 19th day of the scheme being operative today. And as we seek clarifications, as we draw their attention on various anomalies of the scheme, probably good sense will prevail and we will have some better days ahead. So therefore, my suggestion is also to put a hold, put a break as of now. Don't rush with the decision that I want to file a declaration under the scheme. Let the things settle down, let some few more clarifications come, and then you will be able to take a better informed decisions in relation to this scheme. So maybe somewhere around 15th of November or so, you may take a hard look at the situation again, and probably you will have some better information available at your discretion, so that you can take a well-informed decision at that time. This is what at least I am going to wait till 10th or 15th of November before deciding finally. There may be a apparent view that yes, this case is good for the scheme, this case is not good, but final decision will be taken in our office at least by 10th or 15th of November. Before that, we are refraining from forming a final view because of various factors, which we'll see in the slides to come. And as I was saying, the 20 scheme was much better. We will see some of the areas where 20 scheme was far more benevolent to the assessees. My one more feeling which I have at heart is that when this probably will convey to the CBDT also, is that when you are coming out with such scheme, ultimately please appreciate that these are the schemes which are for the settlement of dispute. So have some large heart. Don't try to put everything in your terms. Try to understand from the perspective of the assessee. Try to understand something from the taxpayer's perspective. Please appreciate that ultimately he is shelling out some money and he is also settling out the dispute, even if at times he is having good case. So please respect those feelings and try to be more benevolent, more uh, uh, say open-hearted, rather than being too strict about the interpretations of the thing. If you do that, then probably the schemes may not take off well, and ultimately may not get the desired result which the government itself wants and we also want. So therefore, in such a situation, our request is that try to be more benevolent. So let me go into the scheme proper, and let me start dealing with some of the relevant provisions of the scheme, some of the definitions which are relevant, and the procedural aspect, etc. First and foremost, there are a few definitions which are relevant, and therefore, some definitions explain lot many things, and this is one of those definitions. The definition of appellant under section 89(1)(a). This definition explains us what is the scope of the scheme in a way. Though it is a definition of appellant, but it explains us what is the scope of the scheme. And therefore, let us look at this definition 89(1)(a). 89(1)(a) defines appellant to mean a person in whose case an appeal or a writ has been filed by either him or the department. So both sides can get appeal or settled. So if there is an appeal by the department at the tribunal stage, you can certainly go for the scheme under the Vivaad se Vishwas. So it can be appeal by the assessee, appeal by the department at various forums, including starting from Supreme Court, coming down to the CIT appeal, and of course now we have joint CIT appeal. So if one sits and compare the scheme of 20 and 24, in 20 this authority was not there. Joint CIT appeal was not an authority, which has come in last 1.5 2 years, and therefore this is also included. So if your appeal is pending before joint CIT appeal or till Supreme Court, all these levels are getting covered. And such appeal or petition or SLP is pending on specified date. So now they are saying the appeal should be pending on specified date. What is specified date? For all the reasons, it is for our entire discussion today. Please appreciate that this word specified date is 22nd of July, because on 23rd of July this scheme was announced in the budget which was announced by the Honorable Finance Minister. So on 22nd July, if it is pending, then yes, that is the date which is very crucial for any decision which is to be taken. So the scheme says, the act rather, the finance number 2 act 89(1)(a) says that if the appeal was pending as on specified date, meaning thereby 22nd July, then you are eligible, you are an appellant, you can go under the scheme and you can take advantage of the scheme. Now come to the circular which has come on 15th of October, a couple of days back. On 15th of October, CBDT comes out with a circular number 12, where they are giving some FAQs. And look at the language of FAQ 4, where they say that just because appeal was, so if appeal was pending on a specified date, but it was disposed of later on, that was a specific question asked. So from 22nd July till today, we are on 19th of October. If the appeal is decided, say for example, in the month of August or September, and if I want to go under the scheme, can I go under the scheme? That was the question which was specifically put in this FAQ. And the CBDT upfront replies that no, in such a situation, it will be contrary to the act. They are saying that then there is no appeal pending, and therefore in such a situation, you will not be able to go under the scheme. Now, to my mind, however harsh it may sound to the CBDT or to the ministry, it may please be appreciated that the enactment allows me, and which has been enacted by the parliament. Now, just because in between somebody passed the order, the CIT appeal passed the order, or the tribunal has passed the order, it will not be correct on the part of the CBDT to form a view that it will be not permissible. Circular going beyond the provision of the act, and therefore, should not be the correct way of interpreting. Rather, they should have said that yes, it should be permissible. Now, in ideal situation, the assessee should not have proceeded with the appeal hearing. The assessee should have just mentioned to the CIT appeal that, look here, my appeal is pending and I am intending to go for Vivaad se Vishwas, so please keep it in abeyance for some time. And probably it would have been done. But if at all, it has not been done for whatever reason, either on the part of the failure of the assessee or because of the way in which the department works, you just miss out one deadline and they pass the order, and it happens. So, if that is the situation, then yes, you are going to face this type of situation which will come up. And here the circular is going beyond the provisions of the act, therefore a circular may not be having that much force, in my humble understanding. Then again, we are told a person who has filed objections before DRP and DRP has not issued any directions. So those cases are covered. There you can be an appellant. A person in whose case DRP has issued directions but AO has not passed the order. This is good. So, something where DRP has also given the directions, those directions may be against me. But because AO has not passed the corresponding order, the consequential order, therefore I am still allowed to go under the scheme and take benefit of the scheme if it is against me. And then a person who has filed an application for revision under section 264 is also covered. So when 2020 scheme came, this was not initially put. 264 was not initially covered. Thereafter, this was brought to the attention of the CBDT that, look here, like appeal, we have an alternate mechanism in the form of 264 revision. And why don't you permit that also? So with that, they agreed. And gracefully, they have thereafter made an amendment and they have allowed the 264 petitions also. So that is also now, right from the first enactment stage, they have covered this 264 petition. So if I am, instead of following the appeal route, I am following the revision route 264. Even that is getting covered under the scheme. I can go under the scheme and take benefit of the scheme if I want to. Yeah. So about some comparison about 2020 scheme again. So here we are not having a situation where appeal was allowed to be filed. So say for example, cases where the appeal was time limit for filing appeal was not over. Suppose if I have received the order on, say for example, 5th of July of a CID appeal, where I can go for the tribunal hearing, tribunal filing within 60 days. So I was having time up to 60 days. So 5th of September, I was having time. In between, the scheme was announced. Now, under 2020 scheme, we were allowed to take benefit of this. So where the time limit to file appeal before the higher authorities was not lapsed, we were told in 2020 scheme that yes, you will be able to go for the Vivaad se Vishwas scheme even in that situation. In fact, they went ahead and said that you don't need to even file physical appeal. So only my date was pending. I don't even need to go and file the appeal as a matter of fact. But because my timeline was available, I would be able to go to the via Vivaad se Vishwas scheme 2020. That was the scheme under 2020. But when we come to today's scheme, 24 scheme, we are very categorically told in this FAQ number 9, the circular number 15th of October 24, which I'm referring to. So, in this FAQ 9, we are very clearly told that in such a situation, the appeal is not pending as on 22nd July. Though your time is available, you have not filed and therefore forget it. So here again, there is a discrimination between two assessees. say both the assessees have received the appeal order, CIT appeal order on 5th of July. One of them has filed the appeal on 21st of July or 22nd of July, and the other files on 24th of July. Now, in that situation, the person who has filed the appeal on 24th of July will not be allowed to participate in the scheme, but the person who has filed both the assessees are having same issues, same addition, same amount also for that matter, if you want to take it that way. Then also the person on 22nd July who was quick enough to file his appeal will get the benefit under the scheme, but the person who was delayed by 2 days just because the scheme came in between and he was well within his right to wait for the 60th day, but still he will not be able to file a declaration under this Vivaad Se Vishwas scheme 2024. To my mind, it is not justified because the example which I am giving, somebody filing declaration or appeal on 22nd July and somebody filing appeal on 24th of July should not matter to the department. At best, they may insist, and of course, this was not insisted in the 20 scheme, but if they want, they may insist that okay, you must have filed appeal within time. Friends, when we are talking about filing appeal in time, I am reminded of this question number 59 of the 20 scheme. So when I'm talking about some of the circulars, I am also referring to some of the circulars of 2020 scheme, and therefore, normally I have tried to mention the scheme of for the sake of easy understanding, all the reference to the circular for 2024 scheme, the circular of 15th October. I have tried to mention that as a FAQ, and for those earlier scheme, the 2020 scheme, I have tried to mention as question number 59. So that is for ease of our understanding. Of course, here in this slide, the question number 9, which I have mentioned in the bullet, is not the earlier scheme; it is the current scheme. So that to that extent, I think I will correct it. But subject to that, wherever I am saying FAQ, I am referring to the current scheme. And whenever I am saying question number, I am referring to the earlier scheme. That is easy for the sake of our discussion for the remaining part of the session. So therefore, please appreciate that in the 2020 scheme, we had two circulars, in fact, three circulars. One was circular number 7 of 4th March 20. If somebody is interested in noting down, they can take a note of it. Circular number 7 of the CBDT dated 4th March 20, where some almost 55 questions were put up and the answers were given. This was also in the form of FAQs. So 55 questions were put up. Thereafter, one more circular was followed, and some small cosmetic changes were made from circular number 7 to circular number 9 of 2020, which was 22nd of April 2020. There is not big change between these two circulars. It was basically more of a cosmetic nature and some corrections which were required, some small corrections. So that is circular number 9. And thereafter, there was one more circular number 21 of 4th of December. Because in between from 22nd April to December, I think a huge time gap. But of course, we need to appreciate that that was a time when pandemic was troubling the entire world, and therefore probably nobody was going forward with any of the official work, and therefore something happened in 4th December where 56 question number 56 to question number 89. So in our discussion today, whenever I am referring to some of the questions of earlier circular, they are having some relevance, and therefore you can look at those circulars whenever you want to have some reference. As of today, we have only one circular under this present scheme, which is of 15th October, and there are some 34 questions, 35 questions in fact, in the present scheme. The answers are given, whereas we have got the earlier circular where the number of answers were 89. Therefore, there are some useful references available there. With that, I think I have made up the point that those cases where the appeal was allowed to be filed but not filed is not getting covered under the scheme as of now. Of course, some representation is required, and we will try to convince them. Let us see whether we are able to or not. Okay, that takes us to the moot question as to what is my money going out, right? What is the amount which I have to spend if I want to go under the scheme, whether it is beneficial or not. The commercial consideration part of it, and everything will boil down to this ultimately calculations. And therefore, let us look at the outward outflow of my funds. Here, again, there is a demarcation. So there is again a change between 20 scheme and 24 scheme. Now we are having two types of appeal. Earlier, there was, of course, only no type, and for obvious reasons. But now we have got two types of appeal. One appeal which was filed after 31st of January 2020. So in this slide, we are looking at those appeal which are filed after 31st of January 2020. Meaning thereby, these appeals are filed post Vivaad se Vishwas 2020 scheme. So these are the appeals which are filed after the original VSV 1. And the next slide will see something which was already there at VSV 1 stage. And there is a difference in the text which one has to shell out. So they are saying that yes, for new appeal declaration, for the purpose of our discussion, we can say new appeal and old appeals. Of course, the better way is to mention that those appeals which are pending at the VSB 1 stage, etc. But for the purpose of our loose discussion, we can say new appeals as well as old appeal. So here we are talking about new appeals now. So something which was done post VSV 20, and therefore the appeals which are seeing any VSV for the first time uh, in the life of that appeal, those appeals, right? So declaration should be filed by 31st of December 2024. First phase is till 31st December, and second phase will be beyond 31st December, where the tax rate is going to go up. Of course, last date will be notified. I believe in all probability it should be at least 31st March, and mostly it will be 31st March. But we are not having any notification as of now. That will be notified later on. So till 31st of December, we have the first phase, and thereafter there will be second phase. So if I am making the payment of, if I am settling the quantum appeal, then what I have to pay is only disputed tax. And this makes it really interesting that, it becomes encouraging for an assessee, especially in a case where you are having your own feeling that, yes, Baba, my case is not that good, but I am contesting only for the sake of contesting. I am contesting to ensure that I don't face penalty, because at times penalties are more scary than tax. So therefore, in such a situation, you are given an opportunity that yes, go for the scheme, go for the scheme till 31st of December, pay disputed tax, and we will waive off your interest and penalty. So a very good proposition. Of course, there was nothing new in this. This was there in the VSP 2020 also. But if I'm going for this VSP post 31st December, then my liability will go up by 10%. So instead of 100% of disputed tax, I will be required to pay 110%. Similarly, if it is a payment against interest or penalty or fees, so if the appeal is against interest, penalty, fees, then in the first phase 25%, in the second phase 30%. This is what is required in respect of the newer appeals. And now here comes the discrimination again. My mind, again, this is unwanted, absolutely unfair. You are saying that, okay, some appeal which was already filed prior to 31st of January 2020, and you were given an opportunity in 2020, you did not take that opportunity. We came out with a scheme, you did not went for that scheme, and therefore now, because you have not gone for that scheme in 2020, you now want to go for the scheme, pay more. Absolutely unfair, absolutely unwanted, and to an extent frustrating for the entire scheme. Will you be justified in saying that just because I have not taken the recourse to the VSP 2020, you will charge me 10% extra in respect of tax? They are saying that, okay, if it is a tax appeal, then you have to file 110% in the first and 120% in the second phase. For penalty appeal, they will be saying 30%. So instead of 25, it becomes 30. And what was 30 in the second phase will become 35. So for penalty appeal and interest appeal, pay 5% more. For tax appeal, pay 10% more. Why? The only logic is that because you did not go for 2020 appeal, VSB scheme. Absolutely unfair. See, appreciate that the person gets fatigued when, you are having more and more time frame. There were appeals which were pending on 31st of January 2020, and as a matter of fact, they were pending. But I have filed somewhere in January, say maybe in December 19, I have filed an appeal. At that time, I was having a feeling that my appeal will be listed, it will be heard, it will be disposed of very soon. And I was having merit in the case. Now, because of that merit in the case, I was having a feeling, why should I go for VSB 20? Right? I would not go for it. So I did not go for it. So just because I did not go for it, and because your faceless mechanism did not work, you could not set up the infrastructure, you could not set up the way in which the appeal should be disposed. You had disputes in between everywhere, and the pendency of appeal was only and only because of you, right? There are cases, and in fact, many of you will agree with me, those who are filing up submissions in CIT appeal in NFAC. We have filed submissions 6 times. Notices have come, we have kept on filing submissions more than 5 times, 6 times. So every 2 months the notice comes, we reply, and thereafter nothing happens. So because of your lenient approach, because of your delinquent approach, I would say the appeals are pending. It is not because of me. It may be please appreciated by the CBDT that it is not at the instance of the assessee. Maybe assessee might have taken one or two adjournments. That's okay. That does not mean that the assessee is careless. But after filing the reply to the submissions, there are so many cases, several cases, where the submissions are made on multiple times and still the appeal is pending, despite the fact that the last submission was made 6 months back. Now you are sitting on it for 6 months and you are telling me that okay, because of your this approach, now I am tired and now I'm feeling, Baba, enough is enough, let me settle and close it. I'm not having the wherewithal to bear with this all this nonsense for many years. I want to close it and move ahead in life. So if I want to do it, you are charging me 10% extra. Blow hot, everything is according to your whims and fancies. Absolutely unwanted, absolutely incorrect way of looking at the things, but this is what it is. We have to accept that they are giving this hard representation needs to be made on this, and we are working on this. Actually, the chamber is in the process of making one representation. Of course, now that it is enacted, we see some more challenges, because this will have some implications where they will say that the CBDT probably does not have a power to do that. But yes, this requires some reconsideration at the level of CBDT or the ministry. They should have more sensible way of looking at it, rather than being too I would say miser about giving the concessions. So this is what in respect of the old appeals which were having, which had the benefit of 20 scheme but did not take it. So bear in mind, if you are not taking benefit in 24 scheme again, if at all, and the matter continues, and in 27 you are going to have one more scheme, you will have something like this for the 24 schemes. So the newer appeals. So this is something which is absolutely discouraging. Rather should have been avoided. Yes. That brings us to one question. What will be the position where the appeal is filed by the department? Because it is not that always I litigate, the department also litigates. So if the department has taken the matter to tribunal, what will be my position? And there we are told very clearly in the scheme that in such a situation you will be required to make the payment of 50% of the tax disputed. So because it is department's appeal, and they say that yes, there are 50% chances that you will be succeeding. Therefore, CIT appeal is in your favor. You go to tribunal, department goes to tribunal, and you want to settle that also, you can settle, but your tax rate is lesser, it is 50%. Also, we are told that there are cases where there are covered issues. So I am at tribunal or I am at high court, and I am having a situation where in my own case this issue has already been settled. So there are various reasons for the issue getting settled in my favor. So on the same issue, if I'm having a favorable verdict of the higher forum, then in that case I will be getting a concessional rate. So we are told that appeal is pending before CIT appeal, and my ITAT order is in my favor. Therefore, but still, if I want to go under the scheme and want to settle down, I will be required to pay only 50% of the total amount payable, and only with the condition, of course, that High Court or Supreme Court should not have reversed that favorable order of tribunal. That is obvious, of course. So if the High Court or Supreme Court has not held anything contrary to me in respect of the same issue which the tribunal has settled in my favor, and I want to settle, I can pay 50% and get rid of the appeal of the department which is pending at tribunal. We are also told that similarly, if my appeal is pending before High Court, is pending before ITAT, but High Court has given any verdict in my favor in some other year on the same issue, I can settle for 50%. Of course, condition being that Supreme Court should not have reversed such favorable order. This is obvious, of course. So this is a fact where the department appeal and covered issues. When we are saying covered issues, we are saying covered issues of the assessee. He can settle for concessional rate of 50%. But here there is one more area where I think probably they have not anticipated, and they should have considered this also. We are told that if the order of a higher authority is available in my favor, then you will get the concessional tax treatment. What if the favorable order is from the same forum? Say, for example, my appeal is pending at ITAT for assessment year 1920, but for assessment year 1819 or 1718, tribunal itself has decided the issue in my favor and nobody has traveled further. So therefore, the matter has been settled there. Now, in such a situation, or maybe department has traveled to High Court, but the order is pending, whatever the matter is pending. In any of this situation, certainly the tribunal order in the later year will be following the earlier order of tribunal. There is no reason for the tribunal to deviate if the facts are same. Okay, so normally we are always aware that the coordinate bench decision is always respected. In fact, if it is in the assessee's own case, then it is certainly followed by the subsequent bench of the tribunal, and therefore, in all probability, unless and until there is change in the fact, the matter is not going to be decided in some different way. It is going to come in my favor only, and therefore, in such a situation, also, I think I deserve 50%, which is available only in respect of the higher forum order. So the same forum order should also get the same treatment, according to me, and therefore, we are making a representation on this also, that this requires reconsideration. One more clarification is required. One more amendment is probably required, if at all, and allow me the concession, same rate of 50% for the same forum order. Then the earlier slide we have seen that it talks about the order of the higher authority by ITAT and by High Court. It is not talking about Supreme Court. So suppose what is my appeal is pending at High Court, and I have a Supreme Court order in my favor. What is the position? Because the Act does not speak about it, and therefore FAQ is asking this question, specific question, the current FAQ number 32. They have answered, and the answer is good. They are saying that if it is a Supreme Court order in favor of the assessee, then in that case it is a binding precedent, and therefore the assessee should ideally not settle. He is not required to settle at all, because in any case, why would you settle? Because Supreme Court is in your favor. If the matter is pending at High Court, whenever it is decided, it will be decided in your favor. So they are saying that Supreme Court order is the final verdict, and therefore don't settle. You don't need to settle. And they are also clarifying that if at all you are having multiple editions, so there are say 4 editions, on one of which the Supreme Court is in my favor in earlier year, therefore you will be having the right to say that this time also this issue will be decided in my favor. So remove that out of the disputed tax calculation, and you get the you make the payment in respect of the balance 3 issues, and get your matter settled. So this concession is of course available. If the matter is pending at High Court or tribunal, and Supreme Court is in your favor, you can certainly go for the part payment type of situation, where instead of 4 issues, you will be only paying on the remaining 3 issues, and you will be able to getting it settled. One more area of challenge is that they are saying that this should be all the settled issues, the covered issues should be in respect of the same assessee. So say for example, there is a case of a company in whose case same view has been taken for, say for example, depreciation on intangibles, something like that. Okay, my facts are absolutely similar, but because it was not my case, I will not be able to get the concessional tax treatment. It will be only available to that company about the concessional tax treatment. This may be good insofar as the appeals up to the stage of maybe tribunal or High Court is concerned. Why? Because tribunal will be able to find out some different facts. So if the matter is different on facts, then yes, I may not be able to get the same result, and therefore in such a situation one can appreciate. But insofar as Supreme Court judgment is concerned, my feeling is that Supreme Court judgment is the law of the land. So if at all Supreme Court has decided one particular issue in favor of an assessee, that should be available to all assessee in the country, without any discrimination, without any discussion. And therefore, in such a situation, any Supreme Court judgment, forget my decision, any Supreme Court judgment on a particular issue where I am in appeal or legal issue, should allow me to settle that appeal at a concessional rate of 50%, whether it is my appeal or whether it is department appeal. Deholds that it should be permissible. This is my humble view. Unfortunately, as of today, this has not been envisaged, and therefore, if at all they come out with some clarification on this, it will be better. Because when you are saying that it is Supreme Court judgment, it is a law of the land. It may be please appreciated. Let me also take one example where we are told that if it is my appeal, I am paying 100%. If it is department's appeal, I am paying 50%. There may be also, I am told that if there is a covered issue by higher authority in my case, then I'll be able to get a concessional rate. Now it may also happen that though it is the covered issue, though earlier decision is in favor in my own case, but the department continues to litigate and goes to tribunal. It is possible. So earlier tribunal order is in my favor, or earlier High Court order is also in my favor for that matter, and I win in CIT appeal. The department wants to keep the issue alive for whatever reason. The department files appeal to the tribunal, and I am suffering because of that department's litigation. Now, in such a situation, according to me, it is even more stronger case for me because I have an higher authority and I have a covered issue in my favor. It is not my appeal, it is your appeal. Therefore, I feel that in such a situation, even this concessional rate of 50% is not something which is to be very happy about. And I feel that in this situation, the assessee deserves some further concession. Instead of 50%, maybe 20% or 10%, something like this should have been provided. Even if they are going by the equitable theory, even if 25%, something like this could have been thought of, but it is not thought of. This was there in the same flow was there in 2020 scheme also. At that time also, we were having this grievance that it is covered issue as well as it is department's appeal, then I should get some further concession. But unfortunately, in 20 also they did not accept. This 24 scheme is even more miser in a sense, and therefore I feel that probably it is too much to ask, and we may not be able to get this. But yes, I think it is worth an ask, even if they are going to reject it. We can certainly make a representation on this. Of course, this requires amendment in the finance number 2 Act 2024, but that way they have given so many concessions in 20 scheme also. So probably, if they want, they can do it. Whatever may be the legal difficulties, that can be overcome, I believe. But in any case, this is how it is. And of course, then one very important thing: what will be the favorable year? So, say for example, assessment year 17-18 decided in my favor. Now I am in assessment year 18-19. I can take the benefit certainly. But what will be the situation if it is converse? So my 18-19 appeal is decided prior to 17-18. It can happen because at times some appeal comes up fast, some appeal comes later on. Also, some appeal might have traveled to tribunal earlier than the prior to the earlier year's order. All those things are possible. In such a situation, whether the backward working will also be available, and therefore, if I'm having 18-19 in my favor, can I seek concession in 17-18? To my mind, there should not have been any reservation on this front. But unfortunately, when I refer to the VSV circular of 2020, that is question number 28 of circular number 9 of 2020, we find that they are saying that benefit is available only for later year for a favorable order in the earlier year. The converse is not available. That is what they are saying, and it should be in the assessee's own case. So converse, they are saying no. I would feel there is no harm in giving it. Is the same thing, whether it is year one or year two, it should not make any difference because we are talking about legal principle ultimately. Therefore, that should not have been a hindrance in the eyes of the law. They should have been graceful enough to give that, but they have not given that in the 2020. So something which was not given in 2020 again needs to be pitched up, but looks difficult to be given in 2024 scheme also. With that, let us come to the very important question: what is the disputed tax? So what is the amount which I am going to pay? We have seen 100%, 110%, etc. Now we are going to discuss what is the amount, the manner in which this disputed tax will be, computed. And therefore, there are four situations which are given. So where appeal is pending before appellate forum, we are told that you have to compute the disputed tax as if your appeal is going to be decided against you. Appeal or petition or SLP which was pending is going to be decided against you. You take notionally that this appeal is decided against you, and what will be the tax liability? That is your disputed tax. Similarly, if your objections are before DRP, you compute the tax liability as if DRP is not going to give any concession, as if the variation which has been proposed in this draft assessment order by the AO is going to be kept as it is by the DRP, and therefore you ignore all the benefits which are likely to come to you, and then you come to the tax computation. Similarly, if your order is before the AO is pending, DRP is passed, but consequential order before AO is pending, then in such a situation, we are told that, say for example, in the draft order, the AO has proposed variation of 10 crore, DRP brought it down to 5 crore, then you take that is the final verdict of DRP as per the directions of the DRP, whatever is pending. Now, if you feel that you want to take further benefit, then you want to go for the scheme, then you can go for the scheme, saying that the verdict of the DRP is going to be the final, and you are thereby conceding to an extent that you will not be traveling further to tribunal to seek further relief, etc. And therefore, you can settle at this instance. Similarly, for petition under section 264, I am having a revision under 264. Naturally, under 264, it cannot be against me. All orders have to be in my favor only, or it can be status quo. So if I am at 264, I have to assume that my 264 application is going to be rejected by the CIT. my revision application is going to be rejected by the CIT, and what will be my tax liability. I have to compute accordingly, right? And of course, for all this purpose, the word tax will include surcharge and cess, of course. So we'll be having tax plus surcharge and cess as may be applicable. Interest and penalty is to be waived. One more interesting, and this is there in the provision, the definition of disputed tax. Say I may be having a issue where, because of the appeal which is pending, it is largely on account of MAT credit or AMT credit. I am in appeal. My MAT credit is affected, my liability is not affected, but my MAT credit is affected. In such a situation, what do I do if I want to settle? And we are told very clearly in the scheme that where this dispute relates to reduction of MAT credit or AMT credit, as the case may be, or reduction of loss or depreciation. I may be having a situation where I am in loss, but my amount of loss is getting reduced because of the addition which the department has made. In such a situation, if I want to settle in the scheme, I am given two options. Option one, that I include this amount in my tax credit and I make the payment, and then I am carrying forward the entire amount. So if there is a loss, say for example, I was having a loss of 10 crore, which has been brought down to 8 crore because of the additions of 2 crore made. Now, if I make a settlement under the scheme, pay tax on that 2 crore, what will be my position? I'll be able to make the payment of tax 8 rupees 2 crore, and then my loss carry forward will go up to 10 crore. Back to 10 crore, I'll be able to carry forward 10 crore. Or maybe I settle in the scheme, I don't make the payment of tax, but I accept that, okay, my henceforth my carry forward loss will be 8 crore. So in both the situation, I am either paying the tax or I am foregoing my right to carry forward the larger amount of maybe tax credit, MAT credit, or loss or depreciation, as the case may be. These both options are available. You can do whatever is suitable to you according to your own feeling. If the amount you don't want to pay, you can forget the future tax credit. So this option is available under the proviso to the definition of disputed tax. That brings us to an interesting situation, and which is about the enhancement notice. We are all aware that under the provisions of the Income Tax Act, the CIT appeal is having the power of enhancement. What will be the position if in a situation like this, I have filed an appeal before the CIT appeal, and the CIT appeal forget my grounds, he has issued me an enhancement notice. So the income assessed by the assessing officer is say 5 crore, and I am in that appeal against that 5 crore. The CIT appeal says, forget your appeal, I am going to make an addition of further 1 crore, and I am going to assess it at 6 crore for whatever reason. Now, in such a situation, what will be my position if I want to settle after this enhancement notice is received? What will be my position? Under the VSV 2020, it may be please appreciated that we were told very clearly in the scheme itself that if the CIT appeal has issued such enhancement notice on or before the specified date, so they have put up a date also, that on or before that specified date, on the date on which this clock is stopped in a way, if the notice was already issued, then you have to increase your tax liability, and you have to say that, okay, this even enhancement was going to happen in my case, right? So notionally, I am forgetting my claim of 5 crore. Notionally, I am also accepting that yes, this 1 crore will be added in my case, and accordingly, I'll make the calculation on the basis of the 6 crore, and I'll make the payment, and I'll settle the dispute. This was the enacted provision of 2020 scheme. In the present scheme, there is no such express provision in the scheme. Please note that there is no such express provision in the scheme. Maybe a miss out, maybe for whatever reason, but it is not there mentioned in the scheme itself. So it is not mentioned in the text where it was mentioned under the 2020 scheme. Having said that, if it is not mentioned, I would feel yes, something is not mentioned, then I have to ignore it. I don't have to pay tax on that enhancement which was likely to be faced by me. I don't need to consider that. But unfortunately, here again, the FAQ number 16, it goes beyond the scope of the act, and the circular says that in such a situation, you have to follow the pattern which you were doing in 2020. You have to add it again. Now, here again, the circular is going beyond the scope of the act. To my mind, if a challenge at High Court level someday, we will have some dispute here, and we will be having a situation where probably the courts will rule that no, this is because it is not covered by the act. You cannot impose a tax by way of a circular. That I think should be the way in which one will like to read. Of course, one will have to wait for maybe 2-3 years to see this finally decided. But as of now, the FAQ says so. If you have the wherewithal, you can fight with the CIT. But of course, you will carry the risk that your certificate will be delayed or may not be issued. You will have to carry the matter to the High Court to get the certificate. So all those challenges are going to come up if you want to fight this out. Disputed interest and fee, I think nothing much, except that, if at all this interest is connected to the tax appeal, then you cannot get it settled. But if there is a separate appeal for the interest only, and some of the cases it may be, of course, it is not sizable discussion, sizable applicability. So therefore, we may not have much of discussion on this. And therefore, in such a situation, you can go for VSV declaration also for only disputed interest or only disputed fee, maybe 234E, something like that. If at all you want to have benefit of the scheme, you can go for it. Disputed penalty. So if the penalty is determined in any case where such penalty is not levied or leviable in respect of disputed income or disputed tax. The definition of disputed penalty says penalty determined which is not connected to the disputed income or disputed tax. Meaning thereby, I am having a situation where my quantum appeal is pending, and therefore once my quantum appeal is pending, my penalty is consequential. Therefore, in such a situation, I don't fall under the definition of disputed penalty. But if the appeal is pending only in respect of penalty and an appeal is filed by the appellant in respect of such penalty, so penalty which is not connected with the addition made under the assessment, and I have filed an appeal against the penalty, then yes, I am covered by the definition of the word disputed penalty. And therefore, in such a situation, it will be just 1 second, friends. Yeah. So in such a situation, I'll be able to go under the scheme in respect of the penalty appeal which is pending. One question which comes up, whether 271 1CO and 270A are also covered or not covered, because when you look at the language of the word, the definition disputed penalty, it says that such penalty which is not levied or leviable in respect of disputed income or disputed tax. Now, always it is a case that penalty under 271 1C and 270A are always levied in respect of disputed income or disputed tax. But please appreciate that this means only disputed situation. Suppose if you have not filed an appeal against the quantum, then you are following it here. But if it is disputed, then certainly you are having a situation where you will have to go for the quantum appeal, and the penalty appeal may be not falling under this as of this moment. Right? There may be different situations in respect of penalty and quantum. So say, for example, quantum appeal is pending and penalty appeal, both are pending. Now, whether in such a situation, what do you do? And we are told very clearly as per the scheme that the assessee needs to settle the quantum appeal. If I want to settle this dispute, I have to settle the quantum appeal, and penalty will be automatically waived off. But I cannot do converse. I cannot settle my penalty if my quantum appeal is pending. I cannot do that naturally. And of course, FAQ 11 also says so. It is in sync with the scheme. So therefore, nothing much to be discussed. What about quantum appeal disposed and penalty appeal is pending? If quantum appeal is disposed against me and penalty appeal is still pending, I can certainly go for the penalty appeal, and I will be able to get the benefit of this. Don't ask me what if quantum appeal is decided in my favor. Certainly, you will not go for the scheme, because then in that case penalty is of course redundant and it will be automatically cancelled. Therefore, you will not go for the scheme. But this is a case where quantum appeal is disposed against me and I want to settle penalty appeal. I can do that by paying 25% or 30%, or maybe 30% and 35% as the case may be, depending on the timeline of the order of the penalty order, etc. Quantum appeal not filed at all. I have not filed quantum appeal at all. I was feeling जाने दो नहीं करना है झंझट, but when they levied penalty, I filed appeal against the penalty. Can I settle this? Certainly you can do that, because in such a situation you will be falling under the definition of penalty appeal, and this is what I was having the question here. Such penalty is not levied and leviable in respect of disputed income. Please read that what is disputed income or disputed tax. It is not talking about income or tax. So therefore, as long as the quantum is not disputed, you can certainly fall under the definition of disputed penalty, and you will be able to go to the scheme, take benefit of the scheme only if you have filed. In a case where you have filed appeal only against the penalty but not against the quantum, you can certainly take the benefit of the scheme. No doubt on that. what will be the position where the assessee has filed appeal, the appeal filed to the tribunal by the assessee and penalty is confirmed by the tribunal. So my appeal is pending at tribunal and the penalty against, my appeal is pending at the tribunal against CIT appeals order, which has confirmed the appeal. In such a situation also, yes, I can go for the scheme. And even if the department has filed appeal against penalty which was deleted by CIT appeal, yes, I can go to the scheme and I can take the advantage of the scheme. And my tax rate will be my appeal, my amount which will go out will be either 100% or 50% as the case may be, depending on the facts whether it is my appeal or it is the department's appeal. Let us look at some of the provisions related to procedures. I think so. Of course, you have to file a form 1 under VSV. We had 5 forms: form 1, 2, 3, 4, 5. 1 and 2 were simultaneous under VSV 20. Now we are told only 1 will be there and 2 is not there. 2 is the form which will be issued by the CIT after my form is filed. Form 1 is filed. I have to waive off my right of further litigation by way of an undertaking. This can be on a plain paper also. There is no specific format given, so you can just mention that I hereby, or maybe it will be part of the form itself. I have not seen the form. Pardon me for that. I have not seen the form as of now, but you can look at the form, and the undertaking may be part of that form. You can just see it actually, and then thereafter, declaration will be deemed to not have been filed if there is a flaw. What are the flaws? There are three inherent difficulties which can come up. Defect rather which can come up is that the same contains any material false declaration, or if the assessee declares the declarant violates any condition thereafter. So if there is any condition which are there but you violate, then there will be difficulty. Your form will be treated as invalid and does not act in accordance with the undertaking. If he gives the undertaking but thereafter he goes and files appeal, then he will not be able to continue with the VSP scheme. In such a case, of course the respective appeal will get revived and all the other further consequences will follow. And we are told very clearly that appellate authorities will not decide the issue relating to tax area in respect of which an order has been made. So once you file form 1 and you have received an order, the appellate authorities will stop there and you have to just inform the appellate authority that, look here, I have filed this VSP declaration. They will not proceed with the further decision in the appeal, and therefore there will be a natural stop to the appeal proceedings. Once I file appeal before this declaration, my appeal before CIT appeal or tribunal is deemed to have been withdrawn. So immediately it gets withdrawn. Once I file a declaration, immediately it gets declared. It is deemed to have been withdrawn. Fortunately, they are saying it gets withdrawn on the date of certificate, where I receive within 15 days. There is a certificate which will be given to me. So under section 92(1) of the Act. And once I get the certificate, the appeal is deemed to have been withdrawn. Even if I don't pursue it, I don't need to do anything. It is automatically deemed to have been withdrawn by me. If it is department's appeal, the question comes up: if it is department's appeal, how it can be withdrawn by me? And therefore, we are told that the AOs will withdraw. That has been informed to the AOs; they will withdraw. And this was under that VSV 2020. A specific question was asked, question number 48. They said that yes, in such a situation, the AOs will withdraw. And if it is appeal before High Court or Supreme Court, then in such a situation, you will have to move an application to the High Court or Supreme Court, as the case may be, that you may please treat my appeal as withdrawn. Appeal, writ petition, SLP, whatever may be, you may treat it as withdrawn. A specific application will have to be made to the High Court, and the information about that, the proof of that withdrawal has to be attached to the document along with the payment. At the time when you make the payment, you will have to inform about the withdrawal also. So this is about High Court and Supreme Court. For department appeal, again it will be withdrawn. Question number 48 said so, the earlier scheme. In VSB 2020, friends, we were having a situation where if it is a petition of mutual agreement procedure between two countries, etc., which was available under the earlier scheme, 2020 scheme. In 2024 scheme, it is specifically forbidden. This type of petitions, arbitration, reconciliations, mediation, etc., don't get settled with under the VSV, and therefore we have a specific prohibition section 96A subsection 4, clause 4 rather, which says that you will not be allowed to take the benefit of VSV 2024. Within 15 days, I will get a certificate, and then I will have to make the payment within next 15 days. This is the scheme. There can be some difficulty when you are filing the declaration the last 15 days, because we say that the scheme is available, the first phase is available till 31st of December 2020. What will be the position if I file an application on 24th of December 2020? And if I'm going to wait for 15 days, my time will go away and I'll be out of the first phase. Do I have to make the payment of excess 10%, etc.? To that, we have some inference which can be drawn from this question number 41 of the 20 circular, which said that in such a situation, they will be trying to issue the certificate as early as it can be. 15 days is the outer limit for the CIT to act and give the certificate. All attempts will be made to give the certificate well in time so that you can adhere to the timeline. And therefore, I think in all probability, this will be done this time also. And we'll be having a situation where even if I'm filing a declaration on say 24th of December, maybe 27th December, they will issue me the certificate, permit me to file the, make the payment by 31st of December. I think that should be the instruction which will flow down to the CITs and they will probably act in this fashion. But a practical suggestion is that, better if you are planning to do it, better to get it done maybe by end of November, so that by 15th of December you have a certificate in your hand, and accordingly you can make the payment by 31st of December and get rid of the entire matter. Then designated authority, meaning thereby the CIT will pass an order stating that the payment is made, and this will be a final order, no further litigation by anybody. This order cannot be changed, altered by anybody. This cannot be disputed by anybody. Whatever the order is passed by the CIT after making the payment is the final order, and that will be the end of the story forever. A question comes up: what will be the position if there is a mistake in the order of the CIT? So if there is a clerical error, some inadvertent error which is crept in the order, then in that case, what will be happening? While the CIT appeal passes that order, the CIT rather uses that order of calculation of making the payment. If there is an error in that, whether still it will be binding on me. 46 circular question number 46 of that 2020 scheme answered that he can correct the apparent error. So mistake apparent from the records, something like provisions of section 154 can be taken care of by the designated authority. The principal error, the legal issues cannot be disputed, but yes, calculation error, etc., will get covered. So apparent errors will get covered under this. Rectification is possible by the designated authority. That is what we have been told under question number 46. Somewhat relevance can come here also, and we can use that whenever required. And this is very important, where we are told very clearly in section 92 subsection 4 that declaration does not mean that you have considered to any of the legal situation. And this is the question which many of the time the taxpayers ask, the CAs also ask sometimes, that just because will it be okay if I declare now? I'm having perpetual issue. Maybe a particular issue is there which is running down and percolating down to maybe 5-7 years. Now, in such a situation, I want to settle in this year. Will the department take adverse view of this matter? Will it mean that I have committed that yes, I was wrong, and therefore this will affect my subsequent assessments? The answer lies in section 92(4) very clearly. It says that this does not amount to conceding by any of the side, neither by the department nor by the declarant, and therefore all your other issues will go on merit, and you don't need to be worried about this. Just because you are declaring here, it doesn't mean anything. It doesn't conclude anything. Similarly, you cannot take the advantage if if you are considering here on particular point. You cannot go in the next year and say that, look here, in this year I was having this, I agreed to this, or maybe the department has agreed. If it is department's appeal, especially. See, if it is department's appeal and you settle, you say that no, this is already settled, not decided, and therefore it is settled forever for all the cases of future, which will be absolutely incorrect. You cannot do that. You cannot take the benefit out of it. It is just that this scheme is only for the settlement of these particular disputes which are prevailing as on today. It doesn't have any binding precedent for future events for either of the side. These are the immunities available, of course, that he will not be charging any interest, any penalty, and thereafter, he will not be instituting any proceedings under prosecution, not charging any interest, not levying any penalty. These all things are mentioned about the designated authority. So the section 93 says that the designated authority will not impose or levy penalty, will not charge interest, etc. But in practical real life, we are aware that this is done by the AOs and not by the CIT. So whether the point is whether the AO will still go ahead and do it. Of course, on the face of it, Section 93 is not talking about AO, but let us appreciate something which is given as an immunity under the Act, and let us appreciate that, in all fairness, it will be followed in the same pattern. Something what the CIT cannot do because of Section 93, the AO also, certainly being a junior authority, may not be able to do it. I mean, if some AOs take this view and start imposing penalty, then it will be absolutely not accepted by any courts. But just because if you are reading the things in a very, very strict manner, then you have some worry, but there is no reason to read it in that strict manner, according to me. Interesting question is that what will be the situation where the penalty is already levied or interest is already levied in my case? Say, for example, penalty is more relevant here. Say, for example, my appeal is pending at tribunal level now, and my penalty order is also passed. Okay, I am already having the penalty order. I have already either paid or I am contesting that. Now, what will be the position? If I am contesting that before the CIT appeal level or before the tribunal level, the penalty, then certainly penalty will be getting away. But if I am not contesting and I have paid the penalty, now can I settle this appeal and say that, okay, whatever penalty you have collected from me is not valid because I already settled my primary dispute on the quantum before the VSV authorities, and therefore you please give me refund of the penalty. Certainly should be possible. Of course, it is not expressly mentioned, but certainly it should be possible for one to get the penalty refund, because the scheme provides that the penalty will be waived, and therefore even if it is levied, it will mean that it has to be cancelled, the penalty has to be cancelled, and the refund has to be issued back to you in respect of the payment which you already made. Section 94 says that there cannot be any refund out of VSV, and 94(1) very clearly says that amount paid under Section 91, which is the disputed tax, is not refundable under any circumstances. Absolutely not possible to get any refund out of the payment made for VSV. But at the same time, there is 94(2), which is the second bullet, which says that if the amount is already paid under Income Tax Act, say for example, prior to going under VSV, because the department is doing recovery proceedings in a very hard manner, I have made some payment, maybe 20% I have paid, or maybe I have paid even more. I have made the entire payment. Say, for example, it is the department's appeal before tribunal. I have made the entire payment of disputed tax, interest, everything, and I am either it is my appeal or department's appeal, whoever's appeal before the tribunal. In such a situation, when I settle under the scheme, can I get the refund out of it? The answer is yes, of course, because in such a situation, your interest and penalty, if it is your appeal, interest and penalty, and if it is department's appeal, then interest, penalty plus 50% of tax will have to come back to you as a refund. So that refund will be granted, they are saying, under 94(2) of the VSV scheme. But of course, they are saying that there will be no interest given by us. So 244A interest आपको नहीं मिलेगा. You have to forget that 244A interest. You have to be graceful enough, and you will not get that interest if you want to settle under the scheme. Adjustment of payment made earlier was covered by 26 and 29 of the earlier circular. One can refer. Payment made earlier against the disputed demand to be adjusted. That is what the circular said, and therefore reference is available to us for the this scheme also. You can certainly refer to that. As long as this present circular is in not contradiction to the earlier circular, I am feeling that all the replies given by the CBDT in the earlier circular of 2020 on all the 89 questions will be available to the assessee as a reference, provided there is no contrary view in this scheme or in the present circular. If it is at variance with the earlier scheme, earlier circular, then I think you will not be having the right to go for the earlier circular. Otherwise, all references to earlier circular shall certainly be available, will have a large persuasive value insofar as claiming any benefit under those earlier circular is concerned. Only condition is that it should not be at variance with the present scheme or present circular. Principle of unjust enrichment. So yes, if I make the payment under VSV, I am told that I will not be getting any refund under VSV. But if at all, my declaration is finally to fail for whatever reason, because there are some prohibitions provided, and later on it is detected that yes, I was covered by those provisions. If at all something like that happens, then the payment which I am going to make under VSV, I am told refund is not possible. But I'm sure in such a situation, one will have to travel to the courts and try to, press in this principle of unjust enrichment. and one will be probably justified in saying that, okay, you may not give me the refund under VSV, but then in that case, you please adjust my payment made under VSV under my normal tax liability, because something where the crown cannot unjust enrich itself, and therefore one will have to probably press these things into practice. Of course, it will have its own challenges. You will have to travel to courts to get it done, because at first authority, the CIT level or below that level, probably you will not be having any reason, any hopes to do that, because the way in which the department functions, they will go strictly by the provisions of the Act of VSV, and therefore one will have to bring out to the courts that the adversity is arising to me, and therefore the courts might step in and might give you some relaxation. We have got some decisions. I was not able to lay my hands on it, but certainly there are some decisions on this front as far as the VSV 2020 scheme is concerned. I remember there are some decisions, but in the haste I could not lay down. If I am able to get those decisions, I will share it with the organization, both the organization, and will share it by way of a separate attachment to all of you. Then some restrictions on the benefit. What are the benefits which are available? What are the benefits which are not available? So it very clearly says that the Act does not confer any benefit, concession, immunity, etc., other than as expressly provided. So something which is provided here, that only is available. You cannot seek anything more than that. So what is not mentioned here, you will not get it. Forget it. So don't seek it in any proceeding other than those in relation to which declaration has been made. So you cannot seek relief of any of the issue in some other year. So we were discussing before a couple of minutes about the section 92. Here also 94 rather. Here also similar thing is mentioned, that you cannot seek any addition, any benefit in any other proceeding. Say for example, in the year 1, I have got an addition and I am in appeal under section 68 in respect of the uh, say unexplained cash credit in my books of accounts. Then in the later year, when I'm capitalizing it in my books of accounts, if I'm doing it, if at all I'm saying that, okay, now I am settling under VSV, there was a bogus loan of 10 crore, it was my own money, I am settling under VSV. Now I want to transfer it to my capital account, and I am seeking telescoping benefit in year 2. Certainly it is not available, and therefore, all those difficulties are coming. You will not be able to get the telescoping benefit, because the section 95 very clearly says that you cannot seek anything which is otherwise than expressly mentioned in the scheme, and therefore don't venture to do all these things, otherwise you will have own repercussions coming up in those subsequent years. Some prohibitions are there, and it's a case of a clear-cut no entry, so where you will not be allowed to go to the scheme, very expressly provided. Some of the appeals and some of the persons. So we'll see in two part. One is those appeals which are not allowed, and we are told very clearly that search assessments, appeal related to search assessment 132, 132A, etc., is a clear-cut no. You are not allowed to enter the scheme, very clearly. Under 2020 scheme, of course, it was allowed, and here again I would like to say that where 2020 was more benevolent, more result-oriented scheme, where they were permitting to anybody to travel to the scheme, even if it was a search assessment. Of course, there was a ceiling of tax of 5 crore, and then some further clarifications were given, 5 crore for the entire block, etc. All those things were there in that 2020 scheme. But now we are very clearly told in section 96, if it is a search related assessment, you don't have the right to enter the scheme. Please get out. And we are also told that if it is a prosecution has been instituted on or before the date of declaration, for those cases, for those years where prosecution has been instituted, you cannot take the benefit of the scheme. You will be just not allowed to enter the scheme. In this here, please note one judgment of the Bombay High Court, which has been confirmed by the Supreme Court by way of dismissal of SLP, where it was a case where there was a prosecution instituted on account of non-payment of tax. It was not because of evasion of tax, it was just because of non-payment of the tax. This company was not having the wherewithal to make the payment. The company could not make the payment, and for which the prosecution was launched by the department, instituted by the department. In such a situation, the Bombay High Court said very clearly that it is not having any connection with the income escaping, or the income being hidden, or it is not connected with any appeal pending, and therefore in such a situation, it was not on the issue, it was on account of non-payment. In such a situation, it will be not appropriate for the department to not allow this assessee to go for VSV 2020. So Bombay High Court decided in favor of the assessee that yes, you can travel to the 2020 scheme, VSV 2020. The department carried the matter to the Supreme Court. The Supreme Court dismissed this SLP and it was held that yes, what Bombay High Court has said is a valid proposition. So therefore, if such a situation is there in this scheme also, if somebody is having a situation where you are having prosecution for something which is not having any relation to the issue which is contested in appeal, but for some other issue, you can certainly travel to the scheme, taking recourse to this, and you will have to convince the CIT that look here, I am covered by this decision of Pragati Prefab, where the High Court has allowed, Supreme Court has also confirmed. So please permit me to file declaration for this scheme also. You have your own challenges in convincing the department, but yes, I think you can have a useful reference to this particular judgment. Appeals related to undisclosed income from a country outside India, that is fine. So those, if your income is outside India, you cannot do that. If there is a information from any other country under 90 or 90A, then you are not allowed to travel to the scheme. On prosecution, some other points which were there in the VSP 2020, and let us take a note of this, that if the prosecution is initiated, just initiated, but not instituted, then question number 22 of the 20 circular 2020 scheme came to my rescue. It said that in such a situation, certainly I can still travel to the scheme because it is not yet instituted, it is just initialized. So therefore, if at all you are having a situation under present scheme, we don't have any express circular as of today, we can take advantage of this 22, question number 22. Also, question number 67 of the earlier scheme, where it said that prosecution where it is quashed by the appellate authorities and the filing of further appeal by the department against that order has gone, then in such a situation, you can certainly say that once the department has not preferred any further appeal within the time permitted, that means that ultimately I am relieved of the prosecution and therefore permit me to go to the scheme. Under 2020 scheme, this question number 67 allowed this. Then about TDS default, and this seems very harsh actually. Under 2020 scheme, they have said very clearly that even if the TDS default is there, then you cannot file the declaration in respect of that particular year. Now I might have had a prosecution because of TDS, but my issue is something different. My issue is on quantum addition, which may be different additions or different disallowance. It appears to me very harsh that for TDS default, it is, if I draw some analogy from this Pragati Prefab, I believe that it is akin to this, and therefore in such a situation, in ideal case, one should be allowed, but specific answer to question number 68 of 20 circular permitted said no. So therefore, maybe at that time when this circular was there, we did not have the benefit of this Pragati Prefab. Today we can certainly rely on it, and I believe that the Supreme Court judgment or the High Court judgment will prevail over the circular, and probably yes, in such a situation you will be able to go under the scheme with whatever difficulties it takes you to do that. Declaration not possible even on any issue of same assessment year. So if I may be having prosecution for issue A, but I want to travel for issue B, C, and D, there are five editions in my case. I want to travel for B, C, D, E for the same year. As long as the assessment year is same, I don't have the permission to travel to the VSP scheme. This was as per question number 73 of the 20 circular. As against this, 74 said that yes, for other years I can travel even if the issue is the same. So even if the prosecution is launched for say undervaluation of stock, which is a matter in dispute, and in the subsequent year the same issue is there but prosecution is not instituted, I can travel. Deholds the fact that the issue which is instigating prosecution is pending for 1 year. So the restriction is for year, not for issue. That is what we are getting the message from 73 and 74, conjoint reading of both the two answers. Then immunity from prosecution shall also extend, and this is very important because this was a specific question asked in 82, in 20, and in 35 circular, today's circular also. They are saying very clearly, because many a times the company has made the company has suffered the addition disallowance. Prosecution is also launched for the partners or partners of the firm or companies, directors, etc. The officer of the company. In such a situation, once the company or firm settles, even those others individuals who are launched with the prosecution will get immunity. And both the schemes are saying 2020 as well as 2024. CBDT in both the schemes have very categorically said you will get immunity from prosecution for the individuals also, and rightly so. Then there are some prohibitions in respect of some specific persons. So we have seen some specific appeals. Now we'll see some specific persons who are not allowed to participate. A person who has detention order under COFEPOSA and prosecution launched in this different acts which has been listed. One of them is Bharatiya Nyaya Samhita, and the other is civil liability proceedings consequent to prosecution by income tax authority. So if there is a prosecution already launched by the income tax authority, then these persons will not be allowed, or if it is under Bharatiya Nyaya Samhita, but if it is initiated by income tax authority. Insofar as the other acts are concerned, like say for example narcotic drugs or prevention of corruption act, if it is not initiated, as long as it is not initiated by the income tax authority, you can certainly go under VSV. But if the prosecution has been initiated by the income tax authority, then you are not allowed, only under two cases, Bharatiya Nyaya Samhita, because under Bharatiya Nyaya Samhita, if somebody else has launched a prosecution against you, because it can be levied, it can be initiated by other authorities also. There is a restriction that it has to be initiated by the income tax authority only to deprive you to go for the scheme. But for other schemes, you are not allowed totally. Even if it is launched by any other authority, you are not allowed. So Prevention of Corruption Act, you cannot. I think I said you can, but let me correct it. For other authorities, any of the authority launching the prosecution, you are not allowed to travel to the scheme. But for these two acts, like Bharatiya Nyaya Samhita 2023 and civil liability, for which the prosecution has been launched by income tax authority, then only you are prevented to go for the scheme. A question comes that in VSB 2020 there was a mention of Indian Penal Code, and now because we have got a different scheme, Bharatiya Nyaya Samhita, different act, it is talking about Bharatiya Nyaya Samhita. What will be a situation where a person is initiated, the prosecution has been launched by the income tax department only under the Indian Penal Code as it was then existing. Now, whether on a plain reading of the section 96, you will be well within your right to say that yes, it is not mentioned. Indian Penal Code is not mentioned, and therefore I am allowed to go for the scheme. I would feel it is a miss out. Probably it will be corrected, and therefore, in such situation, whether it is in Indian Penal Code or Bharatiya Nyaya Samhita, under both the situation, I would feel that it will not be permitted. Section 96 would not be allowing you to travel to the scheme as long as the prosecution is initiated by the income tax authority. Of course, this is the on a plain reading. It seems that if the prosecution is lodged under IPC, then probably the section does not prohibit you as of today. But I think it is a miss out, and I think it may be corrected very soon. So it will be too adventurous for one to conclude that yes, in such a situation, I will be able to go to the scheme. Some FAQs, I think, which says about 201 and 41(1)(a). So if I am settling my dispute as a deductor under 201, then corresponding benefit under 201 yes, available. Then, credit will be available to the deductee also. So if deductor, who is treated as an assessee in default, he settles under the dispute under the VSV, then the benefit will be available to the deductee also. How it will work in this 26As regime is a challenge, because 26As has its own mechanism of working. If the entry is not going to get reflected in 26As, and I am sure this entry will not get reflected, so how it will work in this present regime, I don't know in the 26As. But yes, legally, at least on FAQ 20, I am told that this present scheme, that yes, credit will be available to the deductee. It will bring its own challenges, but one will have to get the certificate of the deductor, go to the assessing officer, seek rectification, etc., which will be a Herculean task, but yes, possible to get it actually. Deductor will get corresponding relief under 201 1A also. Interest payable, interest is payable, but deductor will not be treated anymore assessees in default once he settles his dispute. Deductee settles his dispute, deductor will also get the corresponding benefit. That is what we are told in 21. In 22, of course, we are told that 40A1 and 40A1A, etc. Once you settle your TDS penalty appeal, TDS appeal as an assessee in default, and if you are in appeal, if you settle that, you will get the corresponding benefit under 40A1, 40A1A, etc. You will get. If you already paid in the subsequent year, then no more benefit, of course. So that is there. No further relief. But otherwise, if you're not paid, you will be able to get that. And if the appeal for the year is pending for other issues, so say for example, there is one issue is about disallowance of 40A1, 40A1A. There are other issues as well. And if I am settling this, the TDS appeal I am settling, then insofar as the main appeal is pending, I may be seeking relief against that 40A1, 40A1A without making any payment of the disputed tax, and I have to remove that for the purpose of calculation, the addition of 40A1, 40A1A disallowance rather, And for the balance part of the additions, I can go for the scheme under VSV. Multiple appeals, of course, pending before ITAT, and penalty appeal pending before CID appeal, quantum appeal pending before the ITAT. What do I do? I'm told that I can settle any appeal, whatever I want. I can settle either appeal of before CID appeal, or I can settle before ITAT. Even if it is, say, for example, original assessment before ITAT and reassessment, it is pending at CID appeal at this stage. Do I have the liberty to settle any one of my choice? The answer is yes, I can do that. Question 31, FAQ 31 very clearly says that SSC is having the option. Only one thing is missing out, is that in 78, question number 78 of VSV 2020, I was told that if there is a repeated edition of the same thing, I have to make the payment only once. And if there is a disallowance difference in tax liability due to the same issue, I can settle under any one of the thing. Higher of the two will be considered. Whatever is the higher amount of tax under appeal 1 and appeal 2, I will have to settle the higher amount. Lower amount will not need to be paid. That was a specific reply in question number 78. I would feel the same analogy should apply in this 2024 also, though a specific question is not raised as of now. But I am sure that one more round of circular, or maybe two more rounds of circular are expected, at least till the scheme, as the scheme progresses, and therefore probably this will come down as we seek some further clarification. I am hopeful that it will come, because that sounds logical also. If there are different appeals by assessee as well as department, can only one be settled? The answer is yes. I can settle only one of my choice. I don't need to settle both together. But if there are cross objections, then you have to settle main appeal also. If there is a difference between cross appeals and cross objections. So if both the assessee and the department both have filed appeal before tribunal, that is called a case of cross appeals. But where department has filed an appeal and I have just filed a cross objection to support my case on the issues which are decided against me, then it is called cross objection. So in such a case of cross objection, question number 60 of VSV 2020, you may refer. It says that you need to settle the main appeal also, then only your cross objections get settled. But if it is a case of cross appeals, then I have the liberty to select one of the two, whatever is my choice, and the other may be left open. I can continue litigating the same in the tribunal as and when it comes up. Some other relevant points of the current FAQ, and I think I'll try to wrap up very fast so that we can have some question answer if at all the organizers permit. So substantive addition versus protective addition. There is a case of protective addition, all of us are aware. It can be made either in the case of the same assessee for different years, or it can be made in the case of different assessees. So FAQ 12 tells me that if I settle any of the two addition, either I settle substantive addition or I settle protective addition, the corresponding relief will be available in respect of the other addition which is not settled, and the AOs will pass the necessary rectification order. That is what we are told. Request for appeal, withdrawal of appeal. Even if you have just made a request that final withdrawal letter is not yet received from the department, you can file that request for withdrawal. Once you receive the certificate, you make a request for request letter for withdrawal. Final confirmation is not yet received, but you make the payment. You attach that with your form 3. Should be good enough. That is what FAQ 14 says. 12 AA registration and denial of registration, and you're in appeal, it is not getting covered under the VSV scheme. We are very categorical told in FAQ 23. FAQ 26 says very clearly that 148, 148A, etc. is not covered, because as of now, the tax liability is not computed. Here again, I feel that they should be graceful enough, because there are so many 148 and 148A pending. Actually, if they want the scheme to succeed, they should not shy away from this, and they should accept that 148, 148A. And as far as those issues of this Ashish Agarwal and everything is concerned, so we had got multiple rounds. Now we are going to enter the third round after the judgment of the Supreme Court in Rajiv Bansal's case on 3rd of October. So now it is most appropriate for the department to accept that this protracted litigation is not good for anybody, and therefore, if at all they are willing to give some real wings to the scheme to fly, they should be willing to come forward and make this amendment. And 148, 148A writ petitions pending should become part of this VSV scheme. I think probably they will get good revenue on that, and it will be good for the assessees also, which is very much desirable. But I think as of now they are very clear. The intention seems to be very clear cut no, and they have canvassed this in FAQ 26 without any, without mincing any words. So as of now they are having that feeling. I hope that later on they change their view and they come to better view. This is what my feeling is. If there is no amount outstanding, and this is a question which is very elementary, but people do ask this question that sir, मैंने already payment सारा कर दिया है, मेरा appeal pending है, but मैंने सारा payment कर दिया. Can I file a declaration under VSV? Of course, yes, you can do that. There is no reason for you to not to file. What is relevant is that your appeal should be pending. It is not that whether you have made the payment of taxes or not, because recovery proceedings are strongly done by the department. You have made the payment. You are already paid 100% of tax, interest, penalty, everything you have paid, and you are still contesting your appeal. As long as your appeal is pending, you can certainly go for the declaration. There is no restriction on you. You can certainly go for it, and on once you settle your appeal, the penalty, etc., will come back to you by way of refund. Penalty, interest, etc., will come back to you by way of refund. There is no reason for denial of this. Set aside appeal, again, some difference, demarcation between 20 and 24. So we were told in 20 that it is allowed when the appeal is set aside, provided of course that it is not a complete cancellation of the order. So the tribunal has completely cancelled the order and said that it will be adjudicated fresh by the AO. Then in such a situation, the appeal does not remain, and therefore they said that in question number 7, it will not be allowed to you to go to the scheme. But if it is direction is given only to look into evidence and consider, then your appeal is in a way continuing. That is what the view has been taken by severity in 2020. They are saying that yes, you can go for the scheme. Similarly, where the tribunal has set aside the matter to the CIT appeal, they said that yes, you can take the benefit of the 2020 scheme, but you will have to, in such a situation, settle all the issues which are pending. You cannot pick and choose the issues. That was the reply in question number 66. And I think both of them were very logical replies. But when it comes to FAQ 24, FAQ of this present appeal, present VSV, in 24 FAQ, we are told that you are not allowed because once the appeal is set aside, fully or partly, it does not remain a appeal. And appeal is not pending, and therefore you cannot take an advantage. Again, here I think there is some need for change of view by the department. They can seriously look at it, and I think probably it will be good for them, good for the assessee also. Miscellaneous application also similarly, we were told in 20, they were welcoming by way of question number 61. In 24, they are saying no, we will not allow. Miscellaneous application is not an appeal, that is what they are saying, and therefore not allowed. So to that extent, again, there is a change of view. Again, not in good form, but anyway, that is what it is. Few hiccups as we conclude this today's discussion is that, of course, we have all seen how incorrect demands are raised. We have seen some of the orders where there is so many calculation errors, so many pending rectifications, etc. And if I want to settle those, my rectification is pending, my appeal is also pending. In such a situation, the amount of disputed tax computation, etc., will have its own challenges. If they are not making this rectification fast, carrying out this rectification fast, then the assessee probably may get discouraged to go for the scheme only because the amount calculated is incorrect. So therefore, department should act fast and carry out all the rectifications wherever the person is going for VSV. They should be helping the assessee to solve it. Hope they do that. So that is one of the hiccup. Quantum appeal and penalty appeal both are pending. Penalty cannot be settled. Of course, this is a part of the scheme, but in a given situation, one would like to settle penalty, continuing with the quantum, but the scheme does not permit. 20 also did not permit, but anyway, this is the thing. I would feel if this is also opened up, probably some more VSV applications will go, and will be a good thing, good gesture on the part of the department. Okay, Baba, you're settling penalty, we are happy with that. Nothing wrong in that. Ultimately, he's paying something. But if your intention is to settle, you have to have this, your intention should transpire actually into your action. So let us see what happens. Also, addition for unsecured loans, I think we have discussed when we were discussing some earlier slide that, if you settle in this year, you cannot capitalize in the subsequent year. Certainly you cannot. So these are a few hiccups which, one would like to do it, but let us not not expect this from the VSV scheme. There are certainly, that way we need the entire world in our hand, but it is not possible. Issue-wise settlement not possible. This was neither possible under the 2020 scheme. Ideal situation, if the settlement scheme, it should be allowed, because there may be one small issue which is creating a lot of difficulty to me, and I am sure that it is not going to come in my way. But because I am filing appeal, I am taking lot many other issues with me. So now it may be possible that if you permit issue-wise settlement, then it would be more appropriate. The person wants to litigate on some of the principal issues, but wants to settle on some of the other issues. You don't allow that very clearly. The scheme does not allow. FAQ 10 also does not allow. Neither it was allowed under 2020. But to my mind, this is a hiccup. If you want to do more of settlement, please permit issue-wise settlement. This is my wishful thinking. But at the same time, I am mindful of the fact that it may not come. So let us see what it does. I mean, I'm not sure it will. I have very less hopes on this. But in any case, so secondary adjustment again, it is saying that primary adjustment are settled under TP. They will continue with secondary adjustment. They said they will not permit the secondary adjustment also to get settled. Now here, in a way, you are saying that declaration is not admission on legal point. Once you are saying so, the primary adjustment is getting settled. You should be graceful enough to say that okay, the secondary adjustment will not be made. But as of now, insofar as TP assessments are concerned, they are going to continue with the secondary adjustment. The same view was there by the severity in 2020 scheme, but again this time people are saying that it should be allowed. Let us see whether it attracts the attention of the severity, if at all. With that, friends, I think I am done with this. My thoughts on sharing my thoughts on this subject of VSP 2024. I'm really thankful to the organizers for giving this wonderful opportunity. And whatever questions are there, I am very, very open to take. Of course, subject to Jaideep and Bharat Bhai and everybody agreeing to it. So whatever questions are there, we can certainly take up if at all we have time.
Yeah.
Yes, sir. Thank you very much, sir. We have
Yes,
a few questions.
yes,
But
please.
first of all, I would like to say it was an excellent session. You have given a very in detail and comprehensive view of the entire scheme.
Thank you, sir.
Um,
I'm indeed obliged to both the organizations. I'm obliged to all the participants who have spent their Saturday morning with this dull topic of VSV. So thank you so much for being a wonderful audience. And whatever questions are there, I'm very happy to take.
yes, sir. The first question is from Mr. Ravi. The total tax liability as per the order is around tax liability is 5 lakhs plus interest of 3 lakhs. So total tax payable is 8 lakhs. Unless he has already paid 6 lakhs of tax. So balance 2 lakhs is pending. So can a view be taken that tax demand is nil?
Yes, in this case, in the facts which he is narrating, the tax demand will become nil, because 5 lakhs, against 5 lakhs he has already paid 6 lakhs. In fact, he will be getting 1 lakh rupees refund, because the interest part will be waived once he makes a declaration, and therefore he will be eligible to get 1 lakh rupees refund from the department. Of course, 244A interest he has to forget.
Yes, sir. The next question is from CGPI. Whether stay pre-deposit can be adjusted against disputed tax payable under the scheme.
Yeah, so if there is a payment made under dispute.
Hello.
Yes, please.
Ready, Chode? Sorry.
Sorry, sir.
Yeah.
So
So if
continue.
there is, yeah, so if there is a payment made against a disputed stay, department is insisting on 20% if my appeal is pending before CIT appeal. At times, and when it is before tribunal, department asks for the entire payment. Whatever amount I have paid, that time tribunal might have given some condition that okay, you pay 50% and the balance will be stayed. Now that amount is paid towards the tax. So certainly it can be adjusted while computing your outgo today. There is no difficulty on that, I feel.
Yes, sir. Thank you. Sir, the next question is from me.
Please go ahead.
In one of our clients' cases, there was a search conducted on some other person, and some documents were seized in which our client's case was selected for scrutiny. And now
Yes.
my client is in appeal. So can he settle the dispute in VSVS?
I believe it is not covered. Section 96, I'll come to it. Section 96 is having that clear cut. Some of the cases have been mentioned in Section 96. I think I missed out to mention this in the slide, and good that you have brought out this question. 96 search related cases in relation to an assessment year in respect of 96A, which says that relating to an assessment year in respect of which an assessment has been made under 143 or 144, 147, 153, etc., on the basis of search initiated under 132, 132A, also relating to an assessment year in respect of which prosecution has been launched. One second, I read it somewhere. One second. See, it covers 153C also, right? It says relating to an assessment year in respect of which an assessment has been made under 143 or 144, 147 or 153A or 153C of the Act on the basis of search initiated under 132 or 132A of the Act. It doesn't say initiated on me, but when they are including 153C, and I think I read somewhere, I am not able to lay my finger here now as of now. I feel there is not allowed because ultimately it is in accord in pursuance of the search on somebody else also, but you are affected. And when I read 153C there, I feel that it is not allowed. But and I'm not able to bring out the exact clause. I read it somewhere actually. I think it is not allowed apparently. My feeling as of now is that it is not allowed.
Okay, sir.
Let me confirm it again. I'll get back to you offline if you permit me.
Okay, sir. No problem. So one more question. To Mr. Ravi's question, continuance to his question. His concern is that on the issue that interest adjustment first is on total demand as per the proportionment theory. So in his case, will the 1 lakh rupees refund be awarded or interest would be adjusted first?
Yeah, a valid question, but in normal situation, yes, 140A says that yes, interest, the payment which I make will first be appropriated towards interest and then first towards fee, then interest, and then towards the tax. That is what the 140A provides. That is correct under normal situation. But the scheme provides clear-cut immunity from interest, exemption from interest, and therefore, respecting the scheme, one will have to accept that the payment which has been made has gone towards tax and what remission I'm getting is for the interest. Should not be a difficulty when you go for the scheme. There is a special way in which you should look at it, and this applies the Horse Income Tax Act. So therefore, it will be available to you according to me. It should not be a challenge. Of course, if the CIT is taking this view, you will have to explain him very well that look here. Otherwise, there is no point in going for the scheme.
Correct. Okay, sir.
It
So one
frustrates
more
the
question from me.
Yes, please.
Sir, and suppose there was an addition with respect to cash deposits in bank, or a cash income has been added, which was not recorded in my books, and there is an appeal towards it, and the client goes for Vivaad se Vishwas. It's
Yes.
settled in Vivaad se Vishwas. So that cash, can that be introduced in the books of accounts?
No, that is what I said. You will not be able to bring it back in the books of accounts. You will not be able to capitalize it because if you capitalize it, it will bring its own challenges. You will be only settling this dispute. You will not be able to capitalize it. So that is where section 93, I think one of the slides we have discussed, that only those benefits which are mentioned specifically in the scheme will be available, nothing more than that. So probably it will not be permissible to bring that back in the books of accounts by capitalization.
Right,
It
sir.
will have its own challenges.
Right, sir. And sir, one more thing. What had happened is in one of our clients' case, appeal order was passed somewhere in August.
Okay.
So instead of first, the client told us, "Can you keep you file the appeal? Next, Vishwas mein we will settle it." So the approach is going for the department
Yeah,
from
so I
like
don't know whether
fight
Vivaad
it,
se
then we
Vishwas
will
coming
go with.
so frequently is good or bad for the country, but uh, it is good for the. I don't know whether it is good for the profession also. Somebody mentioned in the opening remark it is good for the profession. I really don't know whether it is good for the profession. It is good for the assessee in a way, at least, right? And
Yeah.
what is good for the assessee may be good for the profession, not because we are earning, but because we are getting rid of it. Actually, ultimately, this is something where you get sick beyond a point. Litigating is an exercise where you also get sick. Coming to the client's proposal, I believe he should be waiting for the circular further, where in the earlier 2020 scheme, the CBDT has taken a large-hearted view, and permit it. Maybe if they change the view, they can go for this scheme. And if they don't change the view, then in any case, you will have to litigate, right? So
Right,
nothing wrong in
right.
filing the appeal, keeping your hopes alive. And if VSV comes in between, fine. Otherwise, fight it out on merit. That was dehorse VSV आप वही करने वाले थे, so that is fine. So, anyway, you will have
Yes,
to go
sir.
for it. As of now, I would feel wait for some time, file the appeal at least, wait for some time, and hope that the good sense prevail. They allow you to go into the scheme, nothing like that.
Yes, sir.
Otherwise, it will have its own fate. You will continue the litigation journey without any difficulty.
Correct. Yes, I think if anybody has any questions, they can put right now in the box, or we'll move ahead. Yes, I guess that's it.
I think they're done.
Before we move to formal vote of thanks, I would just like to make a small announcement. The Malad Chamber of Tax Consultants is organizing a TaxCon 2024 jointly with the Institute of Chartered Accountants of India, AIFPT, BCES, and CTC and GSTPM. This will not be a webinar. This will be held in ICI Tower on 15th and 16th November, and the event will be graced by Dr. Subramaniam Swamy, Senior Advocate Rohan Shah, CA Geeta Jani, Senior Advocate Shri Sridharan, C. Avinash Ravani, CA AR Krishnan, and CA Rajat Talati. The topics covered are varied, ranging from income tax, GST, AI, and critical issues of TDS, and there would also be a panel discussion. So I would request all to take a good opportunity of this. The fees would be 2,300 if paid before 30th of October and 2,500 after 30th of October. Now I would request CA Advocate Chetan Joshi to give a formal vote of thanks. Chetan bhai? I think there is a network.
Am I audible?
Yeah.
Yeah, we can hear you.
Hello, friends. This is Advocate Chetan Joshi. I am here to present the vote of thanks on behalf of the Malad Chamber of Tax Consultant and Sri Lohana Mahaparishad CA and Tax Professionals. Beginning with, I would like to thank our speaker, CA Ketan L. Vajani sir, for this informative and enlightening session on Vivaad se Vishwas scheme launched by the Income Tax Department. This will help us deal several cases. Thank you, sir. Thank you, CA Jankna madam, for giving such a detailed introduction of our speaker. We got to know more of him. Thank you, CA Rima madam, for the conducting question answer sessions. It seems that many times the government comes up with the several schemes, but because of the lack of knowledge and understanding, we miss the benefit of it. The sessions like this gives us the directions. Thank you, our President, Advocate Jaideep Sonpal, and thank you, Satish Vitlani, sir, President of the Sri Lohana Mahaparishad CA and Tax Professional Managing Committee, and all the member of organizing such a good session. Thank you, Dr. Bharat Vasani, sir, Chairman of Lohana Mahaparishad, the CA and Tax Professional, for being guiding light and constant support. Lastly, I would like to thank you all the members for participating in the sessions. This encourages us to hold more such sessions which help us in our profession. Thank you all the members. We wish all of you all the best. Thank you, sir.
Thank you.
Thank you. Thank you so much. It was a pleasure. Thank you so much, Jaideep.
Thank you.
I'll leave now, sir.
Yeah.